Hello and welcome to Unacademy IAS, a one stop destination for all the English medium civil services aspirants. Welcome to another session of Economy This Week, wherein we are going to cover the economy related articles from different newspapers from 15th January to 21st January 2026. The discussion will be comprehensive, which will help you answer the questions in the prelims as well as mains examination. If you're liking this initiative, do not forget to hit the like button. And if you are yet to join our YouTube channel, kindly do it right now. Before I start, here are certain very important announcements. A lot of aspirants face difficulties in terms of getting the right guidance, which will help them clear the civil services examination in the first attempt itself. The Unacademy IAS English team has introduced Unacademy Platinum, a structured program which will help you ace the prelims examination as well as the mains examination. In addition to that, provide you the interview guidance as well. There will be weekly test. There will be correct study material which will help you revise for the subjects that you have covered. You can directly interact with the faculties in the live session, get your doubts resolved. In order to experience the platinum session, all you need to do is register for the classes which will start from 28th January, and the registration link is provided in the description box below. Do not miss out, experience the platinum sessions. Now, for those appearing the upcoming prelims examination, I've already taken certain special classes covering current affairs from January 2025 to December 2025. But in addition to that, you also need to focus on certain important static concepts. Have you prepared well for these particular static concepts? Let's find out. I'm arranging three special classes. The first on 23rd January, 8 p.m., that is tomorrow. All you need to do is register using this particular link. This is a QR code, scan, you'll be taken to the page of the special class, right? Hit on the button, enroll now. And tomorrow, that is on 23rd January, I'll be taking up MCQ discussion on financial market plus banking. These particular chapters are very, very important if you want to score very good number of marks in the prelims. On 24th January, same time, 8 p.m., I'll be taking up MCQ discussion on the taxation as well as the budget. And the third session will be held on 27th January at 11 a.m. And the chapters on which MCQs will be discussed will be international trade and agriculture. If you can address these particular MCQs correctly, it essentially means you have done the correct coverage of the static portion. Test yourself by attending and solving the MCQs before your UPSC will test you. Do not miss out. The QR codes for the respective sessions are there in the slides. All you need to do is scan and join the session. But before that, hit on the button enroll now. Let me start the session now. The first article, the Supreme Court has issued an order reversing the earlier order that was issued by the Delhi High Court in case of the Tiger Global Tax Treaty issue. Now, what are the important points? Listen to me very carefully. Earlier, there was an Indian company. I'm using the term earlier there was an Indian company because Flipkart today is not completely owned in India. It's owned by an American company. So earlier there was an Indian company, Flipkart. The shares, that is ownership of this particular entity, was purchased between 2011 to 2015 by entities in Mauritius, by multiple entities in Mauritius. And these particular entities basically represented the US based company Tiger Global. So far, the story is clear. Flipkart, Indian company, the shares were purchased, ownership was purchased between 2011 to 2015, and the shares were purchased by Mauritius based entities, which were again controlled by an American based company, Tiger Global. Point number one. Point number two, this entity or these entities of Tiger Global, which were present in Mauritius, later sold the ownership, sold the shares of the Flipkart company to their parent entity. That is, in simple terms, from the entities which were based in Mauritius. Now, the ownership was transferred to the parent company, that is Tiger Global. And this happened right after some years. Point number 3. In 2017 and 18, there was certain announcements done by the government of India. And according to this announcement, the double taxation avoidance agreement that was signed between India and Mauritius back in right, a couple of decades ago, according to that particular double taxation avoidance agreement, the taxes, specifically the capital gains tax, earlier were collected by Mauritius. But the government of India post 2018 announced that the taxes on the capital gains will be collected in India. The taxes on the capital gains would be collected in India. This is important. But the government of India also announced a particular provision called as grandfathering clause. Grandfathering clause. What is this idea of a grandfathering clause? It simply means before 2018, whatever transactions were conducted, that is, whatever shares were purchased, whatever instruments were there before this particular time period, they would not be covered under this particular changed tax law. Means, imagine if I have purchased the shares of a particular company in 2014 or 2015, and now I will sell them, let's say in 2022, I'll sell the share. The capital gains tax would be applicable, but after 2018, the capital gains tax is imposed by the government, that is the government of India. But these particular shares that have sold in 2022 were purchased even before the change or this kind of a change was announced. So these capital gains tax would not be imposed and collected by the government of India, rather would be collected by the Mauritian government. That is essentially providing protection to the earlier transactions before 2018. Now came the issue. The Mauritius entities of Tiger Global have purchased the shares before 2018, and after this particular change was announced by the government of India, they have transferred the ownership, that is the shares of the Flipkart company, to the parent company, that is Tiger Global. But their argument was, because I have purchased, that is the Mauritius entities had purchased the shares of the Flipkart before the 2018 changes, that is specifically between 2011 to 2015, they should be provided with the protection. They should be provided with the grandfathering protection. But the tax department in India disagreed with that. Their disagreement was this structure that was set up. The Tiger Global, which is an American entity, parent is present in America. This entity has set up structures in Mauritius, and from Mauritius they have purchased the shares or the ownership of Flipkart and then sold to the parent company. The tax department basically argued that these are classic cases of, right, let's say the manipulation, right, basically the tax avoidance tactics. Right, that is right, the companies are manipulating the taxation structure. They are using the loopholes in the taxation structure because they don't want to pay the correct taxes to the government of India. The case went to the court. Delhi High Court ruled in the favor of the Tiger Global. Delhi High Court simply stated, yes, the grandfathering protection should be provided to the Tiger Global. Hence, the tax notice which has been sent by the Indian tax department, it is not correct. The company is not liable to pay taxes. And the total amount of taxes, according to the calculation done by the tax authorities, comes somewhere in the range of 14,000 crore rupees. Now, this matter went to Supreme Court of India. The Supreme Court of India emphasized on one basic principle of taxation. That is, whenever such arrangements are established, the focus should be on the substance of the arrangement and not on form. I'll explain this. The focus should be on the substance of the arrangement, not on the form of arrangement. And this is also the central principle of a set of framework, taxation framework, which is very famously known as GAR, General Anti-Avoidance Rules. Now, what is the meaning of focus on the substance and not on the form? The argument is very simple. The Tiger Global right, the company is set up in USA. It has set up certain, right, let's say, entities in Mauritius. Now, question is why? Why has the Tiger Global set up these entities in Mauritius? They've set up the entities in Mauritius because they know that this country has a double taxation avoidance agreement with India. And when they, right, basically form this kind of a arrangement, when they form this kind of a arrangement, that is setting up entities in Mauritius and through that investing in the companies in India, when they form this kind of arrangement, it was done in order to avoid taxation. In order to avoid taxation, because if they directly invest in India, they will have to end up paying capital gains tax. To avoid these particular taxes, this kind of a arrangement was established. So the Supreme Court of India, citing the GAR provision and simply stating that the focus in such kind of arrangements should be on the substance, not just on the form of arrangement. That is, just because you're present in Mauritius, just because a tax residency certificate is given to you, just because, right, let's say grandfathering provision is there, just because of that, these kind of avoidance measures should not be, right, allowed to be escaped. These kind of the avoidance measures should not be promoted. So the Supreme Court of India has basically cancelled the earlier order of the Delhi High Court and has issued the order stating that the tax authorities are correct in issuing the tax notice to Tiger Global. So what is the impact of this kind of an order? Various experts have raised a concern. Reason being, the tax havens such as Mauritius, it is basically playing a very important role in promoting lot of investments in India. Not just in the stock market, but also in the, right, let's say the investment in the assets, that is the FDI market. So we receive a lot of investments from the tax havens, including Mauritius, by the way, in the form of FPI as well as FDI. If these kind of orders are implemented, then the foreign investors will start thinking twice before routing the investments into India. And as such, right now, there is a requirement of huge amount of investments because there is a lot of outflow of investments from India. And second, there is also concern that the tax authorities might become overzealous and start opening up the earlier transactions, the transactions which were, right, which have taken place in the past, because this kind of a order or the judgment of the Supreme Court of India will give them powers. They will simply start opening up earlier judgments, start sending notices to various companies based on the order which has been issued by the Supreme Court of India, or in simple terms, the latest interpretation of the provisions of anti-avoidance taxation laws by the Supreme Court of India. And this is going to lead to a lot of erosion of confidence on the Indian economy of the investors. So some of the concerns have been raised by various experts, but the government of India has clearly stated this is an one-off case. The ruling will not be taken as a precedent and other earlier transactions will not be opened up, will not be evaluated by the tax department. So these are certain important points associated with the Supreme Court order. Now based on this, let's solve an MCQ. If you want to solve it on your own and then listen to the discussion, pause the video, have a look at the right question and solve it, and then play the video. If you do not want to solve the question, simply listen to the discussion. Let me solve the question for you. Consider the following statements regarding, right, let's say the investments, or consider the following statements. India and Mauritius have signed a double taxation avoidance agreement. Yes, that's a fact, by the way. The union government had set up Parthasarathi Shome committee to recommend regarding GAR. Yes, this is also true. The Parthasarathi Shome committee is associated with recommendation for implementation of general anti-avoidance rules. GAR focuses more on the form than substance of the arrangement. The statement is exactly opposite. The GAR doesn't focus on the form of the arrangement. It focuses or emphasizes on the substance of the arrangement. Right? So third statement, incorrect. Of the three, two are correct. Right option for the question will be option B, only 2. Let me go forward. Next article. RBI moots, or RBI proposes linking of BRICS digital currencies for easier trade. What is the discussion? Back in the year 2025, that is hardly right been 1.5 months now. In 2025, the BRICS meet or the BRICS summit was held in Brazil. The BRICS summit was held in Brazil. And in the 2025 Brazil summit, which was held in Rio de Janeiro, there was right certain important announcement. That is, there was a proposal put forward. What was the proposal? The proposal was to essentially link the digital currencies of the member countries. It was proposed to link the digital currencies of member countries. And that essentially rattled the president of USA. And the president of USA, Mr. Donald Trump, back in 2025, criticized BRICS. And as such, against BRICS, there is always a criticism from USA because they argue that it is an anti-Western bloc. It is a group of countries which is anti-Western. Specifically, it is against USA. And when there was a proposal or when there was a discussion amongst the member countries that there should be, right, basically one currency, there should be interoperability, it will facilitate easier settlement of the transaction, etc. Mr. Donald Trump criticized this and stated that if at all the BRICS member countries try to introduce a currency and try to basically circumvent the US dollar, he would be imposing very high amount of tariffs on the BRICS economies. Now, what is the idea? What is the proposal and why RBI is giving this proposal right now? There are multiple countries within the BRICS grouping which have implemented the pilot project. Mainly the countries which are leading. Some of them are leading, some of them are lagging behind a lot. Many of the countries around the world are yet to introduce even the pilot of digital currencies. The leading countries within the BRICS are China, which accounts for, right, let's say a huge amount of transactions, even though it is in pilot phase. Along with China, even India has implemented the implementation or has introduced the CBDC. CBDC in simple terms is central bank digital currency. The central bank's digital currency in India is e-rupee, electronic rupee. That is, instead of issuing a physical hard currency note, the Reserve Bank of India is issuing this in a digital form. That is e-rupee. So the idea here is in 2026, the BRICS summit will be held in India. The BRICS summit is going to be held in India. And the Reserve Bank of India has stated that India, right, because it's a hosting country, it can basically put forward a proposal to link the central bank digital currencies of the member countries. And it has even discussed, right, basically an idea which is called as M-Bridge. There is a platform or basically a system which has been implemented by Bank for International Settlement, BIS, right, along with the central banks of Thailand, UAE, United Arab Emirates, China, and Hong Kong. So along with these particular member countries' central banks, the Bank for International Settlement has introduced a system called as M-Bridge. It essentially facilitates interoperability of the digital currencies. Right? This was introduced back in the year 2021, and this is right, or this was discussed earlier also as one system that can be adopted as a model that can be adopted to promote interoperability of the digital currencies. So argument of RBI is because India is hosting the BRICS summit in 2026, let's put this as a part of agenda. Let's introduce this as a part of the agenda. And we can discuss the model which is on the lines of M-Bridge. And what is the advantage of this? The advantage is if I can introduce interoperability of the CBDCs, it will essentially help me circumvent, escape from converting the currencies into dollar whenever the settlement has to happen. We conduct a lot of trade, we import, we export, and the same can be stated in the context of BRICS member countries. Lot of dollars will flow into these countries, a lot of dollars will flow out of the countries because the dollar is an universal currency. But there is always a concern that the Western economies, especially USA, They can manipulate the system by weaponizing the dollar. They can impose sanctions. They may not allow you to conduct the transactions in the dollars, etc., which has been done by USA in the context of Russia, in the context of Iran, etc. So, in order to escape this, the experts always argue you need to reduce the reliance on the dollar. But Reserve Bank of India simply states we are not promoting the idea of interoperability of CBDCs through basically to escape from the conversion of dollar. No, we want to basically promote a system. It's not that we are promoting de-dollarization. No, we are not against dollar. Right? That is the viewpoint of the central bank. The RBI simply says we are not against de-dollarization, but we need to promote a system which will help basically transactions become interoperable, reduce the cost of the transaction, make it easier to let's say send money and receive money, etc. So these are certain important points associated with the RBI's proposal. Now based on this, here is an MCQ. Consider the following statements regarding M-Bridge. This was launched by World Bank. This was not launched by World Bank. This was launched, like I said earlier, Bank for International Settlement. So first one, incorrect. It enables peer-to-peer cross-border CBDC transaction. Peer-to-peer means between the countries, amongst countries, from one country to another country. Yes, it will enable the peer-to-peer cross-border CBDC transaction. It was launched in 2021. Yes. Of the three statements, two are correct. Right option for the question is option B. Let's go forward. Third article. China seeks WTO panel to rule on India's PLI manufacturing dispute. This particular dispute arose last year. China went to WTO, dispute settlement body, and filed a complaint against some of the initiatives of Government of India. And most of the focus was on the PLI, Production Linked Incentive Scheme. What is the contention of China and what is the update? Simple. The government of China argues that Government of India, by implementing PLI, that is specifically for automobiles, for advanced chemical cell batteries, etc., is violating the international trading norms. The announcements of the schemes is a violation of multiple provisions of the framework or under the laws or under the acts of World Trade Organization. For example, it quotes that these kind of schemes violate the agreement on subsidies and countervailing measures. I'm not writing the full form. Those who are worried, please don't worry. Listen to the lecture. After the lecture is over, go to the download section. There will be a link. Click on the link. You will get access to all the PPTs as well as the notes of economy this week. So you need to just listen, then download the notes. More importantly, use it for revision. Let's continue. So there is an agreement, subsidies and countervailing measures. There is also an agreement, general agreement on trade and tariffs. There is also an agreement, TRIPS, TRIPS, trade related intellectual investment measures and intellectual property rights. So argument of Chinese authorities is that by announcing PLI, the government of India is violating many of the provisions under the WTO framework. Let me explain to you what is their argument in detail here. The government of India under PLI, let's say for automobiles as well as advanced chemical cell batteries, provides incentives. But the incentives are not provided by default to the company which is covered under PLI. No, you will have to meet certain conditions. Only then you become eligible for the incentives. For example, for automobiles, there is a condition, domestic value addition, DVA, domestic value addition. Domestic value addition is 50% in case of PLI automobiles. And the domestic value addition in case of advanced chemical cell batteries is 25%. Now what is this DVA? The domestic value addition is basically a requirement where if you're a manufacturer, half of the requirements, half of the components that you need, you will have to source it from the domestic market. So what will happen if I do not source it from the domestic market? Then the government of India simply says, although you are covered under PLI, you are not meeting the conditions under PLI, hence I will not give you incentives. The incentives will not be given to the entities. But the criticism, or let's say the contention of the Chinese authorities is that when the government imposes these kind of restriction, don't you think it will basically end up violating many of the provisions under the WTO rules? It is against free trade. What do I mean by that? Earlier I mentioned, I'll give you one example. Earlier I mentioned agreement on subsidies and countervailing measures. Agreement on subsidies and countervailing measures. Under this particular agreement, where India is a signatory by the way, it basically divides the subsidies. It divides the subsidies into three categories. The first one is the prohibited subsidies. Second one is actionable subsidies. And the third one is non-actionable subsidies. Non-actionable subsidies. Now, what is the meaning of the prohibited subsidies? Any subsidy that is given by a member country, a signatory to this agreement, any subsidy that you provide which will prohibit inflow of the imports, rather it will promote exports. Simple. It will prohibit inflow of imports, rather you will end up promoting exports. So when you provide these kind of subsidies, these are prohibited subsidies. And not just this, there is also a provision called as most favored nation, MFN, most favored nation. And this provision under GATT has been mentioned, General Agreement on Tariffs and Trade has been mentioned by China here. What is the most favored nation? It simply says the benefit that you provide to one member country, you will have to extend it to all the other member countries. So multiple, right, let's say multiple provisions under the WTO framework have been mentioned by China here. And the contention in a nutshell is simple. Government of India, by providing the subsidies like this, is promoting consumption of the goods which are produced in India. Rather than allowing the imports to freely flow from China to India. All of you able to understand the contention here? The government of India should have allowed a free flow of imports. And if you want to impose taxes, just like you impose taxes on any country, you can impose. But by announcing these kind of subsidies, incentive schemes, you are promoting, right, the companies which are covered under PLI to procure from the domestic market, to purchase from the domestic market, rather than freely allowing the imports to come, which will be purchased by the companies. And the argument is that by doing this, the Chinese exports are affected. Right? So citing many of these particular provisions under GATT, under right SCM and under TRIMS, not TRIPS, under TRIMS, China has approached WTO. Now once any member country approaches WTO with a dispute, with a complaint, the dispute settlement body under WTO immediately will not start investigations. What the WTO simply says is, the member countries which are involved in a dispute, they should come together, hold consultations, try mediation, try consultations, and just see if you can get this particular dispute resolved amongst yourselves. If you cannot do that, only then the WTO's dispute settlement body will set up an investigation panel. A panel will be set up, and this panel will investigate and submit a report to the dispute settlement body. Now China says, we have tried to consult with India. Consultations have taken place, but we are not happy with the outcomes. We are not happy with whatever response has been given by India. So we want the dispute settlement body to set up a panel now. And this panel will study the report or will study the complaint filed by China and then submit the report to the dispute settlement body. Let's wait and see what will be the outcome of this particular panel. Next article, India's first tailings policy. India's first tailings policy. Now, first and foremost, what is the meaning of the term tailings policy here? Tailings essentially refers to when the mining is conducted and you take out the primary ore. You take out the primary, right, ore. Whatever you want to mine out, you have taken out that. Whatever is the waste left after the mining, that is essentially called as tailings. All of you able to understand? The waste that is left out, that is not the primary mineral that was the focus of mining. No, that was not the primary mineral. Right? You have taken out the primary mineral. Whatever is left out after that, that is called as tailings. So the Ministry of Mines has announced the first tailings policy. The first tailings policy. What is the importance of this? In recent times, there has been a lot of discussion associated with rare earths, critical minerals. And the government of India, in order to reduce the import dependence from China, has announced multiple initiatives. We want to reduce the import dependence and ensure we will also have sufficient production capacity. Multiple initiatives have been announced in order to promote production, in order to recycle, in order to refine, etc. Now, in addition to all these initiatives, there is one more initiative, that is tailings policy. Now, many of the times, what is the requirement of this policy? I'm explaining now. Many of the times, you will mine out the primary mineral. And because the focus was on the primary mineral, let's say the left out part, the waste, could have had important critical minerals. Although the quantity would be much, much lower, the focus will be on the primary mineral. Right? So, other critical minerals which are present in, let's say, the remaining part, the waste part, they are generally ignored. They are ignored because that was not the focus of the mining activity here. Right? So now with this particular policy, we will be able to determine how much critical minerals are present in which dump, in which waste, etc. We will be promoting the extraction of these particular critical minerals as well. That is the first one. The second important reason why do we need this kind of a policy is that the Ministry of Mines controls, right, let's say the areas where the critical mineral mining will happen. Right, the mining activity for critical minerals is under Ministry of Mines. But there are also other ministries, other departments, other, right, let's say other stakeholders within the government which are conducting, let's say, digging activities, mining activities. But these are not, right, basically focused on critical minerals. These essentially will end up becoming the byproducts of the mining activity. For example, Ministry of Coal. They might focus on certain mines, they will dig up, but the focus will be on coal. Ministry of Petroleum and Natural Gas. When they conduct mining activity, the focus will be on petroleum and natural gas and not on the critical minerals. So generally, there are a lot of instances where multiple departments are involved in the mining activity, but their focus is on other components, not on critical minerals. So with this kind of a policy, the government simply says there will be better coordination and cooperation amongst all these departments, which will help us in harnessing the tailings, in getting certain output even from the tailings, which until now was considered as a waste. Right? So that is where this particular tailings policy will play a very important role. Now, in addition to this, remember one more very important point. The authorities which are involved here, the authorities which are involved essentially will be Indian Bureau of Mines, Indian Bureau of Mines, Central Mine and Central Mine Planning and Design. Planning and Design. So, what is the role of these authorities? They will go to the different mines. They will find out what is the quality, what is the scalability of, right, let's say these particular tailings, how much, right, let's say critical minerals can be extracted, right. So these, right, entities will be responsible for that. And the last point associated with this, the policy associated with the tailings, in fact, was announced by the union government in its budget for 25 and 26. So these are important points. Based on this, I've given an MCQ here. Consider the following statements regarding the tailings policy. This was proposed in the Union Budget 25 and 26. Yes. It has been announced by Ministry of Mines. Yes. The focus of this policy is to recover critical minerals from mining waste. Yes. All the three statements are true. Right option for the question will be right the option C here. Let me go to the next article. Niti Aayog has published a index, Export Preparedness Index. This is the fourth edition. This is the fourth edition of Export Preparedness Index. What does Niti Aayog do here? There are parameters, and in the fourth edition, they have taken total of 70 parameters. They have taken a total of 70 parameters, and the ranking has been provided based on 4 pillars and 13 sub pillars. Please remember all of this particular factual data. So the 4 parameters based on which the ranking has been provided are export infrastructure, business ecosystem, policy and governance, export performance. So these are the 4 pillars. These are the 4 pillars. And like I said, this is the 4th edition of the Export Preparedness Index. What is the importance of this? By measuring the performance of different states based on these parameters and sub parameters, etc., or parameters, pillars and sub pillars, etc., the Niti Aayog will provide a ranking for the states. Ranking for the states. And according to the latest report published, Maharashtra, Tamil Nadu, Gujarat are the top performing states under the latest EPI 2024. But what is the importance of this? These kind of reports which are published by the agencies will provide lot of information to the investors. Investors will be more interested in the states which are top performing for a simple reason. The performance is evaluated based on infrastructure present, the policy of the state government, right? The export, import, right? Easiness, etc. So obviously the investors will be more interested because the report is giving them a lot of information. In addition to this, these kind of reports will also promote competition amongst the stakeholders, that is the state governments. There will be competition amongst the state governments themselves. Done? Now, next, in fact, the last one for today, the Startup India has completed 10 years. The Startup India has completed 10 years. This particular initiative of Government of India was announced back in the year 2016. In fact, 16th January. 16th January is also celebrated as the Startup Day in India. Startup Day in India. So Government of India 10 years ago announced Startup India. Under this, multiple initiatives have been undertaken by the government, which has helped increase the number of the DPIIT, the Department for Promotion of Industries and Internal Trade. The DPIIT recognized startups in India are very, very high. Today, according to the government data, there are more than 2 lakh. There are more than 2 lakh DPIIT recognized startups. And there are hundreds of unicorns which are present in India. And as a result of the initiative, this initiative along with many other reforms undertaken by the government, India is the 3rd largest startup ecosystem in the world. 3rd largest startup ecosystem in the world. So these are certain very important points associated with the Startup India initiative completing 10 years. So these are the articles I wanted to discuss with you people in this particular video, covering the newspapers from the 15th January to 21st January 2026. Now before I wind up, if you have liked the discussion, do not forget to hit the like button. If you are yet to join our YouTube channel, kindly do it right now. And final announcement, on 23rd January at 8 p.m., I'll be taking up MCQ's discussion on financial market plus banking. This will be again MCQ based discussion on these two chapters important for the UPSC prelims. On 24th January, same 8 p.m., right, I'll be taking up MCQs on taxation and budget. And On 27th January at 11 a.m., I'll be covering two more important chapters, international trade and agriculture. Do not miss out. All you need to do is scan these particular three QR codes, go to the respective pages, hit the button notify me, and once the class starts, you will get a notification that the class has begun. Join the session and get the benefit of it. That's it from my side in today's session. Take care. See you next week on Thursday with another episode of Economy This Week.